you for that. Thank you for sharing that very insightful personal experience. I'm sure we can all learn from that. I have a question for you both, and Ridwan can start with answering it since he has the floor now. So for someone in the diaspora looking to invest in real estate, would you advise, being an investment expert, would you advise that they invest in land and developing, or they invest in an already built piece of real estate? Which do you think would be a better option for them?
Okay, that's a very, very good question, right? And it's not a yes or no answer. It depends on several factors, right? So I've got some people within my community that have the money to buy, a fully developed property right now and then sell off. Okay, and then there are some people, you could put them in that middle class bracket. They do not necessarily have the funds to buy a fully developed property, right? But they can engage a real estate, company to spread their payments over 24 months, 12 months, 36 months, depending on how frequently they want to pay to develop the property for them. So it depends. So if someone is buying a fully developed property right now, okay, essentially you just want to make quick returns within 6 months or 1 year or 24 months, depending on when they are able to sell the property, right? Or you want to put it off for rental, okay? But if the person is using it for investment purpose, right? Because this is also one key factor that people need to consider before you make an investment decision in the real estate. Do you want to hold it for capital appreciation? Do you want to, what's it called, put it off for rental? If you're holding it for capital appreciation, I would expect that you hold it for a minimum period of 4 to 5 years, right? Before you can, earn something tangible on the sale of that property, right? But if you're putting it off for rental, then you want the property to be developed as soon as possible so that your money is not tied down in the development process so that you start making money. So if you want to put it off for rental, then I would advise that you go for a fully developed apartment, right? Because right from day one, once you pay the money into the crowdfunding platform, whatever funds that the company has provided, you can start earning rental income right away. Right, so people have to take this into consideration. Am I putting out for rental or is it for capital appreciation? If it is for capital appreciation, then you can wait for 24 months, you can wait for 36 months, for the property itself to appreciate. Because even during the development phase, right, the property itself would have started appreciating before it is finally developed. But if it is for rental, you want to ensure that you get a property that is going to be developed within a short period of time so that your money is not tied down in the development of the building.
Okay, I think Ridwan's perspective is very insightful, and I just want to add a couple of things to it. If I were somebody who was in the diaspora, so I live abroad already, and the reason I left is possibly because I was seeking for better opportunities, possibly because of the insecurity. Most of the reasons aren't necessarily positive. So the idea of holding on to assets in Nigeria might not necessarily be one that whets your appetite. I would say that there are one or two little secrets, right? So it's not quite a secret, but call it an open secret. Real estate investment trusts, under the headline collective investment scheme, I'm sure everyone would know about this, offer you the opportunity to invest in property without actually buying it. So collective investment schemes allow a minimum of 100 unit holders to access dividends from property held in trust by this real estate investment company. An advantage to that is that the real estate investment companies, I think they get a 10-year exemption from taxes, and there is a requirement for the distribution of dividends. So as a unit holder, you're going to be seeing your money come back almost immediately and over the course of the life of the property. And that way you don't need to bother yourself about ensuring, I mean, you still would want to do your due diligence, but you can be sure, because the REITs have to be, correct me if I'm wrong, but the REITs have to be registered with the securities and with the SEC.
Yeah,
what does SEC stand for again? How do you use?
Securities and Exchange Commission.
Yes, because they have to be registered. Yes, exactly, Securities and Exchange Commission. Because of that, you can be sure that all their bona fides are regular and there's nothing irregular about it. And you can just stay from the distance and watch your investments appreciate. That's one thing I wanted to say. Second thing I wanted to say is that at the moment, Nigeria is #1 in Africa as a startup investment capital inflows. Nigeria is #1 in Africa. And if you look at the property market right now, there was a noticed, I think, co-working spaces lost about 300 million naira over the course of last year because of the pandemic, right? But work from home has come to stay. So even with companies that are returning to business as usual, it's actually business unusual because they have hybrid structures now where you work from home in some part and you work in the office. In fact, that idea of just being in the office full time and people looking for these huge office spaces and plugging into that era might be over. So this is a tip, it's my bet, it's not an expert recommendation. If you want to have a look at an area where you might get reasonable return on investment, look into investing in co-working spaces, because that looks like the future to me, based on these indices that I've spoken about. Then the third thing that I just wanted to,
Go ahead.
The last thing I wanted to mention in the question is whether you look at already built up property or just bare land. You can do a hybrid of both. So there's some property developments that offer you the opportunity to, so they tell you we're about to develop this structure. It's going to look like this. And then before they've actually developed it, they give you the chance to come and buy off plan. Yeah. Anecdotally, I don't know what the core concrete stats are, but anecdotally, everybody I know who's invested off plan has reported a significant appreciation of the property in that development when it was already built. So say that you pay X million naira, right, off plan. Property gets built up, more people are attracted to the property to invest. By the time they come in, there's already a markup of maybe 20, 30%. They're paying way more than you did when you came in. After a few years as well, depending on the location, in places like Cadogan Estate in Agungi, just for example, in Osaka, London, sorry, in Lekki, the area grows up around that development. Again, there's more of an appreciation. And by the time you're ready to sell or move on or rent, you can make a tidy return on your investment. I'm not a financial analyst, I'm not even a financial person, but these are some of the trends that I've noted which might give you insights into how to structure your investments.
Sorry, let me quickly add to what Nnamdi said, right? Buying off-plan, properties. So one of the key factors that the investor needs to consider buying off-plan is if it is for investment purpose, not owner-occupied, meaning you don't want to live there, you just want to buy it, and then once they've finished developing the property you want to sell. Ensure that you have an idea of the off-takers, right, that the company already has. That's very important, okay? So the off-takers, some of these off-takers, they don't want to make a decision to buy the property, during the development phase. They want to make their decision once they see the property, right? But they would have indicated to the company that, okay, by the time you are almost done with the development, we will pay X amounts, right, of the property at the current market value. So for an investor who is buying, from day one, ensure that the company already has these type of people talking about the off-takers. It's very important.
Thank you for shedding light on that. So Nnamdi mentioned Nnamdi mentioned how you could invest in co-working spaces, but in the course of my research for this topic, I found that most diasporans are moving towards investing in fintech more than real estate. So in your experience, personal, professional, how do you think we can work towards bringing fintech into real estate so that we can maximize as much investment in that area for the economy and then for individuals who want to secure their futures through this type of investment?
I mean, it's a difficult one, right? It's a difficult one when you consider already. I think, if I'm not wrong, for instance, CC Hub as a co-creation hub, which is sort of a, I don't know if you want to call it a flagship startup co-working space in Yabacon Valley, as they refer to it, which is also a flagship in the fintech industry. I think they had to close down their main. I think they had to close down their main space during the pandemic, which is indicative of maybe the increased appetite for work from home solutions in the tech space at the moment. I know another company, Tech Advance, also shut down all in-office operations as well in the course of the pandemic. It might be indicative of that, or it might be indicative just of the complexities of the real estate market, particularly in Lagos, which make it a little bit tough to make decisions, whether regarding investment or regarding taking up ownership or occupation of any property. So I would say that it's really mostly a gamble, right? It's mostly a gamble. You're going to have to do a lot of background research on where the niches are and where the unadvertised margins are. And you need to be very well aware of what the trends are generally in Lagos. I mean, Lagos still, even though we have some of the worst housing conditions and some of the lowest housing prices in some parts of Lagos, Lagos registered as the 20th most expensive city in the world, and certainly the most expensive in Nigeria, because you still have areas like Bodilon, in Ikoyi, and Eko Atlantic, which is still under development, which are still very much high priced and in demand, right? So it's really about identifying what areas could work and building a strategy around that to entice investors. I can't really say much more than
that. Okay. So I think for me, right, there are opportunities in the real estate sector, integrating their processes, right, with 21st, technology, fintech, if you want to call it. Because if you look at other clients in Malaysia, in Dubai, even in the US, right, in the UK, Singapore, Indonesia, they've been able to use fintech to drive growth in the real estate. So I believe that we've got such opportunities here in Nigeria as well. So number one, I spoke about population, right? And then secondly, the discretionary income of, the average Nigerian is reducing day by day. So the ability to be able to buy, a property, 2-bedroom, 3-bedroom is difficult. How much more, a duplex? So for those people living in the diaspora, again, if they're able to channel their capital, right, towards a fintech solution, right, that can cater to the needs of these people, I believe it's going to go a long way. I haven't seen these, real estate fintech solution, in Nigeria in the magnitude that I've seen in the US and the UK, for example, right? There are quite a number of crowdfunding platforms, real estate, companies leveraging, technology. And
so sorry, Ridwan, sorry to just cut in there. I mean, you're clearly the more optimistic of two of us here. So I just wanted to let me bring a little gloom into what you're saying. I don't know if you know about Fiber and Split.
Say that again.
Fiber and Split are two of Fiber, the company.
Right.
Fiber that sells. I think they provide real estate solutions leveraged by technology. Same with Split, and they came onto the market
Yahshud,
with,
by the way.
huge
Same
promise.
with Yahshud, by the way.
Same with Yahshud as
just,
well. Yes.
Let me just plug that in.
The reason I didn't want to include Yahshud is because my forecast right now is about to be a little blue. The promise that Fiber and Split came into the market with, unfortunately, has not been sustained because, again, of the complexity of the market, the kickback of traditional landowners and landlords, and several other logistics-based gridlocks and bottlenecks that prevent a tech-leveraged business. Tech is supposed to provide convenience. It's supposed to provide you a certain certainty that, you know, some things will be ironed out, some wrinkles will be avoided. But it has actually become, it has turned out that it's become more problematic to leverage.
Okay, so I totally get your perspective, right? You know, without sounding too optimistic, I believe there are complexities, right, within the space. But you also agree with me that, you know, the regulatory authorities, right, which, you know, are creating some of these bottlenecks, are beginning to, they've started relaxing their laws. They've started relaxing, you know, their muscles. I mean, you know of, you know, Chaka, Bamboo, how the SEC started cracking down on, you know, so they started giving them that leeway, that, you know, platform to be able to trade. So I believe strongly that if, you know, given what the government is trying to do, you know, within the, you know, the housing, affordable housing space, if fintech can be used, or rather fintech can be used, right, as a catalyst to accelerate the growth of investments in that space. That for me is something that I believe, you know, real estate companies in Nigeria have not been able to crack. Perhaps Yahshud will crack the code pretty soon.
We're working on it. We're working on it. Okay, thank you. That has been a that has been a very interesting back and forth. Thank you for sharing your perspective. Nnamdi has to jump up because I know he indicated that he had a meeting to get to, but thank you so much for your time. Thank you for sharing your perspective. And
I've really enjoyed it. Ridwan, you have to let me buy you a non-alcoholic. Let me buy you a virgin cocktail, please. At some point. Next time I'm leaving. I'm glad, you know, always, I'm glad to always share a stage with you, regardless of the topic.
So much.
Thank you for having me.
Thank you so much. Have a good day.
All right. Have a good day. Take care.
Yeah, you too.
Yes, sir. Ridwan, thank you for sharing your perspective. I mean, you are one of the people we look to in Yahshud due to your expertise in this field. So we are very grateful that you were able to join us today.
Thank you.
We had someone in the audience that I wanted to ask if she had any questions, but I think she has dropped off now. And I mean, that's okay. We were able to inform the audience that would be watching this later about some practical tips that they can go away with. And I'm really grateful for that. I'm grateful for your time. And hopefully we'll be calling on you again to share your expertise in the near future. Thank you so much, and do have a good day.